So the so-called JOLTS report, which measures job openings, separations, and the pace in which people are being hired to quit their jobs, came in slightly below consensus. But this is, by the way, for the month of August, but it's still near the all-time high that was established in July. Although it's more of a rear-view look at the economy, most of the data released in this, it's all about the trends because it's critical, particularly a critical part of the decision-making at the Federal Reserve. And, well, we are told that it's actually featured prominently on Janet Yellen's dashboard. The biggest jump on openings, by the way, came in healthcare and social services, 71,000, but goods manufacturing up 31,000. Remember, this buttresses my argument. I keep talking about those dirty fingernail jobs, the economy. It's picking up steam, and I tell you, we're going to see some big wage increases there as well. Now, that said, the Fed minutes also came out, and it's pretty clear. December rate hike is more or less a done deal, but there is little consensus among these committee members on how transitory, short-lived, if you will, inflation is. In other words, does it mean wages will pump sooner rather than later? The Fed doesn't know. But the tea leaves now, they're reading them, and they're saying the Fed is that we're going to go under 4% unemployment, which is fine. The market, of course, took the conventional wisdom that any sort of suggestion, conventional wisdom of a rate hike is going to hurt the market because it didn't today. In fact, the news was taken in stride. The market rallied into the close yet again. The three major indices all closing at new highs for the session, extending their juggernaut move that's begun since the election of President Trump. In fact, since that election, the Dow today made its 65th record, the S&P made its 52nd record, and NASDAQ 64th record. Here to discuss the market and economic gains, what we need to move the needle further, Jeffrey Cleveland, Payden Rygel's chief economist. Jeffrey, thanks for joining us.
Hi, Charles. Nice to see you.
All right, so the market's moving. The economy is moving. President Trump is taking credit for it. What are you seeing as an economist, as a major economist in this country? What are you seeing?
The economy looks great, Charles. I think this predates President Trump, but it's lining up at a nice time.
I saw a movement in late summer of last year, but what we saw in November was magical, particularly when it came to sentiment, and now we're starting to see reality. I mean, there has been a seismic shift since November 8th.
Here's what's remarkable. In that JOLTS report that you mentioned, there are now only 1.2 unemployed workers for every job opening. That number was as high as 7 unemployed workers for every job opening in the depths of the recession. So we've come a long way. That's a 15-year low for that figure.
Let's talk about keeping it going. President Trump just delivered a major tax pitch. He talked to truckers, who are indeed the lifeblood of our country. They bring us our food and our medicines. Their companies are taxed at very high rates. They're typically small business owners. How do we help folks like that who generate the real jobs in this country?
I think on the margin, when you talk about job creation, you're talking about new and small businesses. They start small and they grow, they blossom, Charles.
So how are we going to do that? To lower these tax rates, particularly for these so-called pass-through corporations? Can it be done?
I think taxes that are lower, that are fairer, that are flatter, that are simpler, all of that, I think, helps. It's a tailwind for growth. But, Charles, I think the economy continues to grow over the next few years, even if we don't get this tax reform.
Is that because businesses in this country have gone back to their original DNA? I always tell people after that major court decision, and when people were arguing whether or not businesses were people, I said, no, they're organisms, right? They want to grow, they want to take market share, and they want to do great. Are we back to our original business DNA?
I think businesses are all about people and ideas and idea generation, and that was never lost. Maybe it was temporarily delayed by the downturn, by the financial system. But we see evidence now that the economy is growing at a 2.5%, maybe 3% clip here in the second half. That means, Charles, the unemployment rate dips below 4% next year.
Right.
It hasn't been that low since the 1990s.
Right.
And maybe one other time before that. So I think that's a really remarkable outlook and a great sign for the U.S. economy.
Great. Thank you. Thank you very, very much. Appreciate it.